strategic processes a company undergoes to enhance its efficiency, streamline operations, or address financial distress. Financial distress can arise from various factors. Now, ladies and gentlemen, please listen. The other day, we saw what was happening at KQ. We saw what was happening at KQ. KQ went ahead and borrowed what we call a syndicated loan. A syndicated loan is such a huge loan, such that it can't be given out by one bank. If one bank goes ahead to give, like, say, 100 million to one business, the risk will be too high. So normally what happens for a syndicated loan, you make, in this case here, a proposal to various banks to partner, and then they raise resources, they give you this entire money as a loan, now as partners. So we had 3 banks here. We had the ABSA, we had the Equity Bank, and we had what here? Stanchart. So they raised some quite substantial amount, which they gave to Kenya Airways. So Kenya Airways, of course, upon getting this money, they were able to bring in good aircrafts, etc. And life seemed to really be on the rise. The pride of Africa, wings to fly. 3 years down the line, these guys would no longer be able to do what to repay back the loan. They would not be able to manage to pay back the installments, which they were given as per the plan. So in this case, they found themselves in financial difficulties. So whenever we are in financial difficulties, we should not wait till we die 100%. We should be able to do what to restructure. So restructuring is all about looking at how do we enhance our efficiency. It could be like a problem with our operations. It could be we have a problem because of a high debt. So in this case here, Kenya Airways was able to call all these guys into a meeting, and they were able to do a restructuring. How do they restructure? They restructure in a way that these people accepted an equity. They accepted an equity debt swap. Equity, debt what year? Debt swap. So it was debt, which in this case now they told these banks, you guys forgive our debt, but in case of this, instead of this debt, let's give you our shares. That is what we call restructuring. You have to give us that handle as well. Yeah. All right. Yeah, there's a handle. Okay, great. Now, ladies and gentlemen, if you allow me, then I'll be able to go back here and read restructuring and reorganization. Refers to the strategic processes a company undergoes to enhance its efficiency, streamline operations, or address financial distress. Remember, ladies and gentlemen, whenever you are financially distressed, what happens? Financial distress arises whenever you're not able to meet your obligation. You are not able to meet your obligations. When the directors, in this case here, keep on running away. They're running away because of what here? They're running away simply because, from the suppliers. So you are in financial difficulties. All right. So we told you that financial distress can arise from various factors, including number 1, market changes, shifts in consumer preferences, technological advancements, or changes in industry. Regulations can affect a company's revenue streams and market what here? Competitiveness and market competitiveness. Please listen and listen to me very well, ladies and gentlemen. Remember, you could be doing very well financially, but whenever there is a market change, perhaps in this case, there is an alternative product that has come over and taken the market by storm. People are shying away from your products. What will happen is that you find yourself being financially what here? Being financially distressed. You'll find yourself being financially distressed. I'm trying to look at causes of what here? Financial problems, causes of financial distress. And one of them, ladies and gentlemen, is the fact that the market could change against you. The market could be unfavorable to you. And once it's unfavorable to you, then your revenues will go down. Your revenue streams will dry. When they dry, of course, what will happen next? It's called what here? Financial distress. Financial distress. You're still on page number 1. How now you've gotten the papers. Now, ladies and gentlemen, from there, we move straight away to the second point. The second point is poor management. Poor management. Poor management, ladies and gentlemen, I would want you guys to do me a favor. For so long, I've never gotten to see your faces. I've taught these online classes for so long, I've never gotten to see your faces. Today, I want you to put your cameras on. Please put your cameras on. And then I would want everybody, including my students that I have here, to touch your chins. Please touch your chins. I want to see you guys touching your chins. Please touch your chins, touch your chins. Touch your chins. I can see one of them, not touching. Great, touch your chins, touch your chins, touch your chins. I mean, these guys are not touching their chins. They're not touching their chins. Chin is not this one. Chin is this one. Is it this one or this one? Now I'm even confusing them. I'm now confusing them. So at first, in this case, you were right. Chin is this one. Why am I confusing you? And I can see you guys in your cameras, you're touching this, you're touching this. It's because now here, I'm the manager. And because I'm the manager, I'm the leader, whatever I will do, most likely you guys will follow. When I tell you touch chin, I touch like this. All of you, most of you will end up touching this as a chin. The same case. Remember in Kenya here, over 60% of employees go to their workplaces every morning with an intention of stealing. Every morning. They want to steal. So that as a manager, if you are also part of that stealing problem, you don't want to put in strong internal control systems, I can assure you, the moment you show these guys that you want to steal, that you can steal as well, everyone else will steal, and this company's revenue will dry up, then automatically you will find yourself being what you're financially stressed. So because I'm so sure you guys are going to become managers, be managers who lead by example. By example, otherwise your companies will be financially stressed as they got in the handout. Great, great. Now the gentleman from there, the third point, which will make you guys, your companies in this case here to go under, to become financially distressed, is what we call economic downturns. When we have recessions, remember how the economy, ladies and gentlemen, behaves. The economy normally behaves like this. The economy behaves like this. This is how the economy behaves like. The economy normally behaves like this. The economy moves like this. So when the economy is up here, we say that the economy is doing what here? It's booming. Boom. So whenever we have the economy booming, ladies and gentlemen, what happens? Sorry. Whenever we have the economy booming, what happens here? Whenever we have the economy booming, even if you have a kind of a lazy type of business, you're not very aggressive in marketing. When the economy is booming, then the country's economy is booming, automatically the demand will be out there. Because the consumers will be having a higher economic purchasing power. What about, for example, when the economy is here? Here we talk about the economy being what here, depressed. You know, we have recession it's when it's moving like this, recession, and then we have depression. So when the economy is depressed, then automatically the consumers will not be having adequate purchasing power to buy your product. If that happens, then, ladies and gentlemen, you guys will be in financial problems. You'll be in financial distress. If I may ask, all of us, most of us in this case here, we are in Kenya here. If I may ask, where is our economy at the moment? Are we here? I think we're here. At home. Things are happening, isn't it? Guys who are selling land, currently are able to sell land, too much of it. Where are we as a country? Are we at the boom? Are we, in this case here, at recession? Or are we suffering from depression? Where are we? You guys are talking to me. Where are we? Economically in Kenya. Depression. No. We can't be, okay, I know we are not doing very well, but we can't be in depression. The online students, what are they saying here? What are they saying here, these online students? Where are we as a country? And remember this time around, these theories, we have to really tackle lots of theory areas. Your examiner now is moving towards more questions of theory. So it will not be like it used to do initially, just number crunching. No, we must understand these things. If you look at the past papers, they are asking us about what conditions which will drive business to financial distress. You must be able to remember. Like these economical downturns, right? Like that. We are just surviving, and like what Crispin is saying, that we are just surviving. So we are neither here nor there, right? Great, great. So move on to the next concept, ladies and gentlemen. Here, what are we being told there? Over leveraging. So under over leveraging, what we have, leverage is debt, isn't it? So leverage is debt. If you take in this case here a lot of debt, automatically you will find yourselves in big what here? Problems. You'll find yourselves in big problems. So over leveraging. The moment you over leverage, then you will never really be able to meet your financial obligations here. You'll always be having issues here. Sorry, I'm just setting up something here. I need to balance something for these ninjas who are online to see what I'm doing. Great. So over leverage. When you are taking these debt amounts, like what Kenya was doing, when you are taking these debt amounts, then everything is still very, very good, right? But when it comes to paying is very, very painful. Once in this case, you start paying these loans, automatically that means cash outflows will be very high. You will start trading. So over leveraging. The next one, number 5, is operational businesses. Operational, we have here operational inefficiencies. Operational inefficiencies, where in this case you are not able to operate. You're not able to operate efficiently. So if it's production, your workers are lazy workers. You have lazy workers. Things are not happening. When things are not happening, then automatically you will get yourself, in this case, you're trading. You will get yourself trading. So we have operational inefficiencies, and then we have legal issues. Somebody takes you to court. Courts are not cheap. It's very expensive to hire lawyers. All right. And then at the end of the day, you can get the charge saying that we are fining you guys 10 million. Where do you get that money from? Then we have what we call technological disruption, ladies and gentlemen. Technology can disrupt businesses. If you remember the story of Kodak, is there anybody in this room who has ever heard of this company called Kodak? No, most of you guys are very young. Most of you came during when we have this phone, kind of what here, photos. Simply snap yourself like this, and then you post on Facebook automatically. What used to happen with Kodak, this guy will come to our homes on Sundays, and then they take us great photos. And then they were telling us that they were going to wash the film, isn't it? Then they come back the other Sunday after 7 days. So then we had this disruption in terms of what here, technological disruption in the form of mobile phone photography. Now, the chairman of Kodak rubbished that disruption. He said that there is no way we can ever get photos being more clearer than the Kodak photos. So he rubbished that. He never knew that there was a younger generation coming whose appetite for fast photos was very high. So these guys, one of the fine days after around 2 or 3 months, they came to a big press conference and said, now we have become bankrupt. We never knew that we would become bankrupt. And he went there with the entire team of management and signaled that, you know what, the managers who are here are not thieves. What has drove us out of business is technology. We never embrace technology in good time. That's why you're seeing hotels like Hilton closing. So many hotels are going down because of what here, Airbnb. So technology can easily make you get into financial what here, problems, financial distress. Have you given this speech as this handle? Need to get that handle. Do we have a class or something? Put that class or something. All right. So I will be able to pin this handout here for these online ninjas. So these points are very, very many. Like now you can see external factors. External factors like natural disasters. Natural disasters, ladies and gentlemen, natural disasters like earthquakes, like the other day we had floods. There are businesses that were pushed out of, sales, out of making any activities by water. Floods, they were washed away. So this automatically can lead to what here can lead to financial distress. Now, ladies and gentlemen, now going to the main part of my subject today. When a company faces this financial distress, should we let it die down and yet we are finance managers. No, finance managers need to provide what your solutions. Finance managers, we must provide solutions. It may undergo restructuring and reorganization to address these challenges. This can involve various strategies, such as which strategies do we have there? The first thing, if you're a finance manager, you will think about to advise this guy here for purpose of longevity is to do debt restructuring. So, and this, I'm so sure we have always done this debt restructuring, even ourselves. I remember when we had COVID, I had a big loan with a equity bank. So COVID in this case, it came like this. I mean, I would go to equity bank, tell equity bank that I'm paying this kind of an installment per month. No, I can't. So what did equity bank do? They went ahead and in this case, they decreased the duration. They decreased the duration, right? And of course, the installment went down. At times, you can even ask for debt forgiveness, like what we are seeing Kenya and these other small countries trying to do. They're telling these big brothers that, you know what, I mean, we took this debt, and even because of lack of proper accountability, I mean, we may not even be able to know where some of this money, please forgive us, please forgive us. Yes, you can look for what you're calling debt restructuring as a means of survival, as a means of getting to business, as a means of getting to business. All right. So these online ninjas are normally called by students ninjas. Are you able to hear me very well? Are we connecting really? Are we connecting? Are you able to hear me very well? Are you able to hear me very well? Ah, great. We have Miriam, great. Thank you so much. Thank you so much. Thank you so much. At least here I can see your names. Like I can see Cindy. I can see Kerry Odanga. This is a guy who married last month. And we never invited him. No, that's very bad. Because I'm your father here. I also need to celebrate with you in some of these small achievements, milestones, isn't it? Milestones. So please always invite me to those functions, but I always tell my students, if you happen to marry an accountant, don't call me. You're an accountant and you're marrying an accountant. Don't call me. We need to diversify. In finance, we talk about diversifying what here? Please. Like I would want in this case here, the male ninjas here, to marry primary school teachers, right? Or nurses, isn't it?
Yes.
Or you want that? You want an accountant? No, that one would not be very good.
Doctors.
Doctors, oh, you want to buy that? No, that guy will be very busy. Will be very busy. Will be very busy for him. All right, now at least I can see we are connecting. Now, number two, to be able to get out of financial distress, you will have to go for what we call cost cutting, what here? Measures. I mean, there's no way you will just die because of costs, which are up there on the roof. A very personal example, like before COVID, my kids used to go for this British education. I used to call fees of about 1.5 million and very good employers that time. But of course, in this case, what happened upon COVID coming down, I took them to Happiness. Here in Buru, 60,000 a pound. Cost cutting, and that's how I survived. And I, in this case, here continued taking those small leaders and those great schools. By now, maybe I would be auctioned. All right, I won't be having any place to stay, especially in a room. So you have to make changes here. The same case with companies. When things are not working out, we have to seek for cost-cutting strategies. We may be forced, of course, it's illegal in terms of HR, but I mean, it's a better evil to do than laying off workers for them some meeting. Tell these guys you are earning this much, but for COVID duration, we can't afford. We must look at strategies of cutting costs for us to survive, for us to increase liquidity in the company. Then we have asset sales. So under asset sales, this is where most ninjas outside here make mistakes. Look at a big company like Uchumi. When Uchumi was depressed financially sometime past, what they do for survival, of course, at the end of the day, in the long term, they crash down, like the aviators crashes down. So they crash down. So in this case here, these guys, when they were doing very, very poorly, they went to their head office here at Aga Khan and they sold that building. So they did what we shall be studying in AFR called sale and leaseback. Sale and leaseback. So they sold to release equity, to release, in this case here, capital. This is a strategy that I want to really recommend to all finance managers here in my classroom. Don't allow yourself to get into a position where auctioneers come to your doorstep. When auctioneers come to your doorstep, like some friend of mine, and he used to tell this guy, he had a very good place at Modigliani. Modigliani is not Modigliani, no, but there's a place, very good building, all right? And now auctioneer started advertising his building. We told this guy, you are even better off selling that building yourself. Try, run as fast as possible. Start in this case selling that asset or any other asset for you to pay this financial. So he started in this case like looking for court injunctions. Even if you get a court injunction, there is no way you'll be able to stop somebody who gave you money, who you have been able to charge this particular asset against. Somebody has charged that asset against your demands. So he has an upper hand because he's the chargee. So this guy, then you'll get court injunctions, but straight away the court lifts that injunction, he will sell. The better thing to do is sell your assets. So that is not kama tatizo for financial distress. Unapata hapa finance manager tajiri, unapata ukienda kuna loan ya taba, hakuna loan gani. It may reach a point for your survival. You start even thinking of selling your personal items for the sake of getting peace of mind. How will you survive in this Kenya when you have, in this case, here some company which is calling your pastor, telling your pastor that, you know what, this guy called Unia has our debt. I would rather sell my things. So in this case here, asset sales is a practical example of how you can raise liquidity in the company, of how you can raise liquidity in the company. I know when I discuss this, so many students here, ninjas of AFM, will tell me, Mwalimu, please don't teach us those things. We can even teach on the bound. When they go to the exam, they get those as the top questions. Those are the kind of things that you'll be able to say. So you must study them, all right? And you have to get, of course, a way of not learning them, but understanding them in a way that you'll be able to regurgitate them in an exam. All right? So I pick on another one, do all of them. So asset sales. The next one, ladies and gentlemen, here, we are told is strategic partnerships or mergers. When things are not working out, even governments, when they realize that they have a business like a parastatal, like for example, Hilton Hotel started suffering a long time ago. What happened? The government of Kenya, in this case here, disposed of its shares to some external company and a broad company. So they released off 51%, and then the government was left with 49%. That's how you bring in a strategic partner. What is actually happening also with what here, Telecom Kenya? Telecom Kenya, of course, the government has entered into some strategic partnership arrangement with some French organization. So you bring in this case, a strategic partner to help him because we want to, improve your liquidity. This strategic partner is not coming for free; it's coming to buy shares. So they will give you some liquidity like that, and be able to bring in experience of running this company. You're going to bring in experience of running this company. All right, ladies and gentlemen, we have here like financial recapitalization. Yes. Financial recapitalization, what do you do if I'm the finance manager and then I realize that things are not working out? Sit down with these shareholders. Tell the existing shareholders that maybe you guys, you are the donkeys that are carrying water this company. We know that you are really strained. We know that we are really tired. But if we continue like this, then we shall shut down everything and reduce therapy. So in this case here, what do we do? Let's give you a rights issue. So we give them a rights issue. What's a rights issue? Rights issue, ladies and gentlemen, of course, these issues of what here, shares of a company to the owners of the company, to the existing shareholders, but at a lower price. At a lower price, at a lower price. So by doing that, you have incentivized them to give you money, which will make, in this case, the development, the company, what you need, the company, liquidity means you should be able to do. This is like water in the company. What's the money about the party go to dry? No, want some liquidity, want some liquidity, and they're trying to look at ways of improving. Let me see what these leaders are saying. Adjust your board. Yes, sorry, Ken, I'll be able to do that. Thank you. All right. Now from there, we go to product portfolio optimization. Product portfolio optimization. Ladies and gentlemen, I will be able to tell you something from the word go. You should never, ever, in this case here, think about what here, putting all your eggs in one basket. Never. Those old ladies or mothers in 19, I think 00 or even before, they told us that when you went to any market, you should never put all your eggs in one basket. Because if you stumble on a rock and all your eggs are in one basket, what will happen? You lose everything easily. But what if, for example, you took like these eggs and put them in two baskets? So when you're walking on your high heel shoes, all right, now two baskets, you're trying to, even if you stumble on a rock, chances are it's only one basket you will go down and you will salivate something, right? You will salivate something. I've seen people making mistakes. Like I had a friend of mine. This friend of mine used to work for a very good company. And then, of course, he retired. He got about 15 million in those good old days. So this friend of mine did a financial management mistake. You know, like how that time there was a lot of craziness. Craziness for what year? For properties. This land. Nasema Mugonda, mafuta hizi. Imekuwa mafuta tamu. Sasa yakaenda akachukua pale electricity pesa yote akaeka kwa building. That time this was a lot of money. Not like now. So I was able to do like a 4-floor apartment. Very nice floor. So when I was trying to construct one time, there are some people came and put some red mark that this thing is what year is illegal. So was able to bribe his way out and he continued, went all the way, finished, did the finishing, brought in some tenants, they started giving him something. One day some guys came and told this guy that, you know what, you build on a riparian land. This mzee bulldozer, this mzee up to now he has never recovered. What do you think was his mistake? Putting all his eggs in one basket. You know, for you to be able to raise like a 15 million pension, trust me, you're working your socks off like the whole year. You don't even have time for your family. If you see somebody who is able to build like now this amount here for pension, this guy never had time for family. If I were this man, this is what I would have done. I would have taken this 15 million. Some of this money, of course, I would have taken towards here, shares. Some of this money I would have bought, in this case here, what we call the annuity pension. You know, annuity pension, we tell them, fine, I'm supposed to get 15 million, but 5 million put it in an annuity pension, when I'll be getting something every month, actually. Every month, till I die. And when I die, whatever is left in that annuity plan, you give it my next of what year? Next of year. Very, very good. All right. And so if you are so much obsessed with these real properties, you can have like say 5 million going in this case here to a property. You know, there are people who tell you that these are good, but they are not tangible. But the African man, I'm also there. All right. They would want in this case here to have a building because at times they can pass around that. That is it. They can see, right? So if that is the case, there's no problem. It's still an avenue of they're coming up with a portfolio, but please limit the amount there. And then of course, we have like now government bonds. Government bonds, very, very good. We simply like right now, I mean, if you've got like this, talk of let me just put at 20 million. You have 20 million, although right now the rates are going very down, with 20 million, you would easily have gone to Ruto's government. When people have no faith in his government, you would have easily gone to his government and told the government here, you know what, I have this 20 million. I want to give it to the government in form of an IFB, an infrastructure bond. Then Ruto's government would have easily given you 20% per annum return. 20% per annum return means what is that every year you're getting what year? If, for example, a long-term bond of say 25 years, so every year you're getting 4 million every year. Is this a good investment? Of course, you can't accept this. And she'll tell you this is a bad investment because interest to them, actually learning in AFM, interest in Islam is haram. It's haram. But for Christians, don't you think this is much better than rent or income? It is. Because 20 million today will not be able to keep, not 4 million a year. 20 million today, the apartment you will do at the very best, they'll give you like say 200,000 a month. So 200,000 a month, you know, there are taxes there, right? And remember, 200,000 a month, I'm assuming full occupancy. Is it possible nowadays to get full occupancy? No, again, rental income is never passive. Rental income is active. If you want seriously passive income, you should always go for what your government, bonds, and the treasury bill, because there you don't work at all. You put in your money. If they tell you they'll be putting this interest to your account on Thursdays every 6 months, by that, every time it is 2 p.m. I mean, when you go to your mobile phone, you'll get a notification that money has been sent. That is the kind of passive income we're looking at. It will always be higher. If it's government, higher. I mean, how do you tell me that your tenants? I mean, I've seen landlords who literally chase after what we are tenants. Literally chasing after. Then you tell me that is passive income. No. So the same case, when you realize, ladies and gentlemen, you are really, really struggling as an organization, then you must think about this portfolio. As we shall be studying in this subject, a portfolio is basically a mixture of assets. You're mixing assets here for purpose of diversifying your risk. So the same case, ladies and gentlemen, with these products here. With these products here, you also need to come here and do something very, very important. We normally call this one, you'll be studying this in leadership and management. We have 4 types of products. We have those products that you shall aggressively advertise. So we are calling this one here advertising. So we have here low, we have a high, and then we have here revenue or market share. So revenue, so we have low, and then we have a high. Now listen. There are those products in this case that you will really advertise. So you're advertising them aggressively, and then they're also responding by giving you high revenues. Those products, we normally call them star products. Like which one? Like Aereo. Aereo, you know Aereo? Aereo is. It's a product, you know what I'm saying? Is a product that they really, really marketed, and it was really doing very well to the extent that Unilever took them to court because the sales of Unilever were really going down, affected. So in this case here, then, in that particular instance, this area was a star product. It was a star product. Now, how about this one here? You are advertising aggressively, very aggressively. But in this case here, revenue from a product not there. Is there anybody who could be knowing a product outside here? That we are seeing an aggressive marketing campaign. But I mean in terms of revenue, nothing. Anybody who could be knowing that kind of a product outside here? For example, is it Airtel? What do you think is the update of Airtel in the market? Airtel, yes. Somebody is mentioning Airtel there. But they are really trying. But there is nothing happening. There is nothing happening there. So that is the case then. We shall call this one a problem child. Don't write this. It's called a problem child, or in this case here, a question mark product. A question mark product. Just like, for example, the ladies that we have in the house. When you give birth, of course, one of those KPIs, key performance indicators of the health of your son, of the health of your daughter, will be like, are they adding weight? So every time unapeleka yeye pale kwa clinic, unaambiwa ukakulishi, unasema lakini nimekapatia surgery. Hakuna kitu akajakula, lakini mbona ka add weight? So daktari anakuambia kwamba usali problem what here? Problem child. Because you're trying your best, but in this case here things are not working out. They're not working out. So we call this kind of a product what here? Problem child, or basically we put a question against it. Why are we trying this much and that things are not responding? Things are not responding. All right. And then last thing, there's one here. Here you can see advertising. We are not advertising, but the revenues are what you're very hard. Have you ever seen this kind of a product? That a product that you are not advertising at all. But ladies and gentlemen, in this case, the revenue is way there, up there. Those products, we shall be calling them cash cows. These are cash cows. These are cash cows. Because we are not marketing at all, and yet we can see revenues coming. So what do you do? Where can you go and add to come? They are called cash cows. And then lastly, we have these products here that now we are not even advertising at all because you realize even if we advertise, nothing is happening. We normally call them what here somebody dogs. Now, ladies and gentlemen, this is a supermarket. This supermarket, it has realized that hey, now we are really struggling. Things are not working for us. Things are not working for us. Then in that case here, what should they do? What they should do under product portfolio optimization, they're supposed to study all their products. Get to see, for example, in these shelves, which products are not moving at all. Those are tying our capital. We are calling them what here, somebody? Dogs. So dogs, in this case here, what do? You call for a sell those things which are worth 1,000, sell them for 100 shillings. They simply get to go away. So under product portfolio maximization, you are studying all the products you have, and then in this case here, slot them. In this quadrant, especially dogs, always divest to release the money in them. Even if it's at a loss, at least get some cash there, and then this cash here, you transfer this cash to this kind of what here product for liquidity to increase, All right. Ladies and gentlemen, after that, I would want us to move on. Now we are going to the main thing here. We are told here methods of measuring corporate failure. And we have the first one, which is known as Altman's Z-score model. This is known as Altman's Z-score model. So the first one is known as Altman's Z-score model. Altman's Z-score model. How do we get to measure and say that, hey, we have failed? Where are we? How do we measure and get to know our bankruptcy levels? So to measure our bankruptcy levels, we have various models. We have in this case here what we call the Altman's Z-score model. Now from here you have to start writing your notes. Methods of measuring bankruptcy. Now the students that I'm teaching here physically, one gentleman has told me that he has never seen me physically. Is there any other one who has never seen this model? This is a very bad time. All of you. Oh, okay. You have never seen me, not in YouTube. Nowhere. Okay, great. How about the online ninjas? Do we have any online ninja who has never seen this man? Who has never seen this man? Who has never seen this man? I give him a gift. I want to give them a gift. They have never seen this man totally. They have failed the exam. They would have gotten a gift here. So, ladies and gentlemen, one of these models that we'll be using here to measure bankruptcy is what we call Altman's Z-score model. So in this case here, this model is used to measure levels of bankruptcy. Levels of what here? Bankruptcy of organizations. Levels of bankruptcy of what here? Of organizations here. It uses 5 ratios. Five ratios in predicting corporate failure. It uses 5 ratios in predicting corporate failure. And these 5 ratios, we normally use the acronym WAREMAS. Anytime you hear of Altman's model, we shall always think about what here? WAREMAS. Always, we shall think about WAREMAS. Anytime we talk about corporate failure using the Altman's model, we must always remember the WAREMAS model. We must always remember the WAREMAS model. Out of this WAREMAS, we shall be able to get 5 ratios. Out of this, we shall be able to get how many ratios? 5 ratios. We shall be able to get 5 ratios. WAREMAS. Very, very important. Have you guys been able to write up to where I am? Great. Thank you very much, Ida. Thank you very much. That's a pretty new name. Great. So anytime we talk about, in this case here, Dr. Altman, Dr. Altman Z-score model, we must always think about who? About WAREMAS. We must always think about WAREMAS. All right. So then this water mass really, what does it stand for? So whenever we talk of water mass, you need to know that this will be coming in pairs. This wall and the bar, they come in pairs. All the others will be coming single. So this wall will be used to give us what we call x1. This is x2, this is x3, this is x4, this one here is x5. So please try to draw this. I'm so sure ladies are normally used to using rulers a lot, but here don't use a ruler. Don't use a ruler here. Here we are not using anybody's ruler. Here we are using anybody's ruler. All right. So we are calling it the famous water mass. We are calling it the famous water mass. We are calling it the famous. So today you may forget about everything else that I've taught you, but you shall always remember water mass. Very, very important. So this x1, we are saying that x1, ladies and gentlemen, we are saying here that x1 is wall. X1 is wall. We are saying R is x2 is R. X2 is R. We are saying x3. X3 is A. We are saying x4. X4 is M. We are saying x5. X5 is S. X5 is S. X5 is S. All right. So then, ladies and gentlemen, this is what we have. This WO stands for working capital. Working capital. Working capital. This one here stands for retained earnings. Retained earnings. Retained earnings. This one here stands for EBIT. This one here stands for EBIT. 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 And people tell you what EBIT. Is there anybody who knows what EBIT stands for in full? Interest and tax. Earnings before interest and tax. So the one as profit before interest and tax. Profit before interest and tax. All right, ladies and gentlemen, here we are. So this is market value of shares. Market value of ordinary, not any share, but ordinary shares. Market value of ordinary shares. Market value of ordinary shares. Market value of ordinary shares. And then we have the last one, which is X5, which stands for what is somebody? Sales. Which stands for sales. But you see, they're supposed to be ratios. How do we make them ratios? Very easy. When a child is born like this and then they start talking, is there somebody who can tell us what kind of words all of us must have had? What kind of words this young baby just start pronouncing? Is it Baba? Mama? Are you sure? How about the online guys? These young kids, when they start, it can't be Mama. It can't be Mama. It can't be Mama. Better. All right. Yes, it is star. It is star. Don't sleep with you. It is star. Normally, to change these two ratios, you come and divide this by tar. You divide this by tar. You divide this by tar. This is the only one you divide with T. Like that. Like that. Like that. All right. All right. Great. Thank you, Ken. Great. Great. This is very important. And let me know once you guys are able to write these ratios up to here. Let me know once you're able to write these ratios up to here by you guys putting thumbs up like this live. You put thumbs up like this. And of course, any student who would want to join us, either here at Stanbank House, first floor physically, or for these virtual classes, please, this is our number. We cannot disappoint, we don't disappoint our students. 0793 555 000. That's our number for inquiries. Any inquiries? They should send here. If you want to be taught by a ninja, inquiries like that. So this TAR stands for total assets. Now, TAR stands for total assets, total assets. We have in this case here TL standing for total liabilities. This stands for total liabilities like that. So you have total assets versus total liabilities like that. Now, for me to be able to get this Z equation, for me to be able to calculate these 5 ratios, what do I need? I only need 2 things. For me to calculate this, what do I need? These are requirements. As an accountant, if you want me to calculate for you the what I must think, I need 2 things. I need a statement of financial position and an income statement. So the requirements, what do I need? I need a statement of financial position. I need a statement of financial position, a statement of financial position. And then number 2, I need an income statement. I need an income statement. The moment you give me those 2, then I'm sorted out. So I want us to look at an old question. Remember, always old is gold. So I want us to look at this December 2014, question number 3. December 2014, question number 3. You can write it there, December 2014, question number 3, or you simply write there, handout 1. That's how you'll be able to trace this question properly. Handout 1, first handout, handout 1, first handout, handout 1, first handout, abracadabra, handout number 1, abracadabra, 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 abracadabra. All right. So in this case, for my case, I'll be able to protect it here, and I'll be able to share with you guys. I'll be able to share with you guys this particular handout in your paid WhatsApp groups. So here they are telling me, are you able to see this new guy as well? Are you able to see that handout? Yes. All right. Is there something you can't see? Okay. All right. So you're told here, the following are the summarized financial statements of Shida Products Limited. Look at the name of that. It's really telling. This company cannot survive. Cannot survive. So statements of Shida Products Limited, which is facing financial difficulties. So they've given me income statement. They've given me income statement there. And then number two, we have the statement of what here? Financial position. So I've told you must be given those 2 things. Then additional information, corporation tax rate is 30%. We are told there. Number 2, the company shares are actually trading at 30 per share at the securities exchange. Then number 3, the company's cost of capital is 12% for interest rate at the bank loan. On the bank loan is 12%. The Altman's model for predicting corporate failure is as follows. Then we have here where we have what they've given us formulas that they cannot give you those formulas in an exam. That's an old question. They would expect all of us to really cram this concept of what must. They want us to give them the company's Altman Z score, and then we comment on the results. So where shall we be able to, ladies and gentlemen, reach here? Where we shall be able to reach here, ladies and gentlemen, what we shall be able to do here, ladies and gentlemen, is this. This is what we are doing. This is, if I'm the one doing this, what I'll do, I'll first of all get TAR and a TM. Total assets, go to the balance sheet. Give me total assets and total liabilities. This is your work. I want to see whether we have even one student who will be able to give us the total assets of this company from the question provided. Total assets of this company from the question provided. Is there anybody who can give us the total assets? Anybody? Well, thank you so much. Thank you so much. My online students are able to see these 1266,000. My online students are able to see the 1266,000 as the total assets. Oh, yes, they can see 1266,000. Thank you very much. Thank you very much. How about total liabilities? Go to this liability section and give me total. Remember, it is current and non-current. It is short-term and long-term liabilities. Abracadabra, abracadabra, abracadabra. There's an error there. That bank loan is supposed to be 183,000, right? The bank loan is supposed to be 183,000, 183,000, 183,000, 183,000, 183,000, 183,000. Anybody is able to get? I think this time round I'm going to give physical students lots of presents. It's all my major now giving me figures. How much? 897. How about you, my sister? You don't have 897. You have a different figure. Discuss among yourselves. You have different figures. Discuss among yourselves. How are these majors getting 897,000? Which is correct. Which is correct. My online students is there. I can see so many comments. Oh, equity and liabilities. Mahabu, tumeanza leo topic 1. I mean, it's topic number 5, but this is our first topic. It's topic number 1, but this is our first topic. This is our first. This is our first. This is our first topic. All right. All right. Thank you very much, Nancy. So are you going to see the 897? All right. Now let me show you. There are many ways of getting this. One of the ways, of course, you could go the ninja way, the long way, right? And take all the current liabilities, which are 400 what year? 20,000. 420,000, and then you say plus. Ladies and gentlemen, what we have here, you can see long-term liabilities there too. We have banking 183,000 plus 294,000. So this one then will be able to tally with your 897. That one will be able to tally with your 897. This one here will be able to tally with your 897,000. We'll be able to tally with your 897,000. These guys may not be seeing that side. Do it dog on you. 897,000 like that. All right. So this is very clear now. 897,000. Now from there, I'm so sure of something. The next step will be for us to come here and get what we call the working capital. You must give me the working capital, but I'm so sure you must have forgotten the formula of working capital. You must have forgotten. That's what I'm 100% sure. Current asset minus current liabilities, yes. Current asset minus. So it is CAR minus L. Current assets minus current liabilities. My online students are going to I'm going to type the book. Maybe we type squeezing in boom kidogo. Maybe we type squeezing in boom kidogo. Anytime they want us to give them working capital, we shall be taking current assets minus current what year? Liabilities. So is there somebody who has a balance sheet there? Yes. Yeah, please go to the balance sheet and look for current assets. And then we have current liabilities. We deduct them. Let me share this. Let me share this. Let me share this. Let me share this. Let me share it like that. Let's see, ladies and gentlemen, whether we have a great major. Let's see whether, ladies and gentlemen, we have a great major. Let me be able to see the current assets. Current assets negative. Oh, the final asset negative. Negative what here? Negative 1? That's 5,000. Negative 1 for 5,000. No, 45. Sorry. 45,000 negative. So the online guys, is there someone who has not been able to get that value? The online guys, is there someone who has not been able to get that value? Because what we have done is to take the total current assets, total current, there are 3 of them, there are 375,000. Minus the total current liabilities, which are 420. So we took 375 minus 420,000. That is how we got the negative 45,000. Gentlemen, when you will become finance manager, and of course I know some of you are finance managers. Is anybody who is a finance manager in the company? What do you mean? Accountant. You're still juniors in the companies. We shall overcome. We shall overcome. How about online students? Do we have somebody with a finance manager here? Assistant finance manager. Great. Great. So one of the roles that you will always be expected to execute is to ensure that you always have a positive working capital. Your working capital should never be negative. And how do you do this? It's very easy. When, of course, you are negotiating with your the people are lending you. For example, someone will come and tell you they're supplying you these materials worth this much. What do? You ask for longer periods, payment periods. Ask for longer periods. But anybody who owes you, for example, this RCM, and there are students who owe us, what should we do? Tell them like that. Pay today. I don't want you to stay with my mom. Then automatically we'll have, in this case, some kind of balancing where the asset then will be high, because no current asset, the big problem will be cash. So cash should always be higher. And for you to do that, you look at the inflow, try to enhance inflows coming in a lot. And then number two, the outflows are quite stingy. Most of these big companies, if you work with them, you become very poor. Go and ask them. Sorry to say this. For example, Safari. Those guys will tell you 90 days credit period. 90 days. These big companies, it's a joke. Work with them to supply them. I mean, you will have to do quite a lot, suffer a lot, right? To work with them. That's why if you look at their balance sheets, always their working capital is so good. But the engineer says no. For example, if it's Safaricom, can they give you credits? That's what you are calling making calls. It's a very small percentage of people are given credits, right? Otherwise, most of us, cash upfront, isn't it? Cash upfront. All right. Good. So here we are. Now, once we get those three things, then what you do like myself, right? Don't have you. I want to create space. Great. So then let's calculate now these ratios one at a time. We start with X1. X1 working capital is negative 45,000 divided by our tau. Tau was 1266,000. Here you should always give me answers in 4 decimal places. You should always give me answers in 4 decimal places. Wanafunzi wa physics wanapenda sana sababu tunaona sura zao. Walipokuja walikuwa wanashangaa jamaa hata anajua kufunza FL. Lakini sasa with time sasa wanaona jamaa sawa, hata sura zimekuwa tofauti. Sura sasa zimenyoroka. Mara kwanza ulikuwa na adabu. Unasoma moja pale na angeeleka. I wish I also like students wanakuwa wanaweka kamera zao on na waona, lakini wengi sio wanaangi sana. Haya, sasa wanafunzi wa online, please usaidie hii answer. Nasema negative. You can assist me. Great. Unangoja Nancy amesema ni lakini sio 4 decimal place Nancy ala. Nancy. Negative 0.0. 35. Now these are 4 decimal places. Those are 4 decimal places. Are we together, ladies and gentlemen? Are we together? Wanafunzi wangu wa online style kufunza kabla nipatia assurance kwamba tuko pamoja. When I get like 1 student out of 40 responding, I'm so sure we are not together. Great. Thank you very much. So like X2. X2, this means that want me to take retained earnings. I divide by total assets. Retained earnings. Even if you examine, those days when I was young, when customer used to contract me, I used to be a rough examiner. Can you set paper? Kama ni msichana ametoka kufanya exam na alikuwa amevaa makeup. Yaani ndio makeup yote inaenda chini. Mbona kuja nasoma paper na shangaa hivi FM ama ni umsa? So in this case, the good examiner always gives students 2 retained earnings. Give students retained earnings in the income statement and give students retained earnings in the balance sheet. And then you see the clever ones, which one they will be able to select. They'll be able to select. Let's see. Here I was able to provide the 2 of them. And don't call me a service. So retained earnings here for the balance sheet. Now, here your balance sheet, isn't it? Retained earnings, your balance sheet. Income statement ukija hapa juu, umeona retained earnings ya income statement minus what? So hebu tucheze ile mchezo ya karanga pata potea. Chukue gani sasa retained earnings ya income statement kama retained earnings ya balance sheet. Pata potea. Because it cannot be pata. Your balance sheet, how many income statement? Balance sheet was above the accumulativeness. You know, when you are measuring your levels of problems, you always look at what your balance sheet is. These are all the earnings cumulatively. So in this case, we shall always use the balance sheet Just in also from here, and it up into brackets, balance what here? Balance sheet. And you can do balance sheet. Balance sheet. All right. Then come here. So the 10 times your balance sheet over here. When somebody double 2 divided by total assets. Total assets ambazo ni 1266,000. Total assets ambazo change 4 decimal places. Now what we have here? 4 decimal places. What we have here? 4 decimal places. What we have here? 4 decimal places. What we have here? 4 decimal. We have Nancy. This is a great ninja. Someone 1.1754. I don't know physical. It's not very, very usual. Not very, very usual. Thank you very much. Pamela Wabomba. Great. 1.1754. Thank you very much. Now, from ladies and gentlemen, we come to X3. So X3, we have EBIT divided by what here? Time. You see that EBIT, EBIT for balance sheet. EBIT in a more. Income statement. Are you able to show me? Are you able to give me the EBIT figure? I Sylvia can see Sylvia. 84. Wait, actually wrong. Actually wrong. And it's before interest. So is it 8? I'm confusing this figure. You see, you know, some earnings before interest and what you're talking. Other condition for brackets, EBIT. And what the case is. So this should be 84,000, yes. This should be 84,000, yes. Then we divide this by total assets, which are 12,66,000, like that. Which are 12,66,000, like that. So abracadabra, what are we able to get here? What are we able to get here? Abracadabra, ninja. Ninjas, they should be swift in how they throw kicks. Otherwise, cast members are a Goliath will come and knock you down and tell you, repeat this paper. It's very unfortunate, but what to do? What to do? What to do? What to do? But trust you me, for the number of years I've taught, what I know this paper needs an aggressive student. You can't afford, in this case, to be a bank bench and it's because we can't all of us sit here. But you see, in Zoom, all of us can sit at the front. At the front. Sitting at the front means participation. You have to participate a lot. Give answers, some answers will be wrong. So if they're wrong, so what? So it's learning, isn't it? Colleagues, we must endeavor. Otherwise, this is a paper like there's a lady who called me and told me, Mwalimu, me, I'm coming from Students College, and I'm okay paper 7 times. 7 times. Shida ni nini? Hiyo kitu ya unanyamaza. Ukinyamaza, always AFM will get away like kutoka kwa nyoka pangoni. That even as that mangapi in the AFM. AFM wants you to always participate, give answers. I've never seen any student in this case here who is very, very quiet in an AFM class person. So if you are that kind of a student who is very, very quiet, please, for this paper alone, I teach AFR. I teach AFR. AFR is quite a simple paper. That one I can tell you, go and keep silent. Never even give me any figure and you'll pass. But AFM, you can bet. We can bet. And I will win the bet. Hapa ni mwanafunzi kuongea. Hata kama unaongea uongo. Wewe sio unaongea utati. Repeat. So if you remember ngapi sample 0.06664 like that, isn't it? Now there is one thing that normally disturbs my students a lot in this ultimate thing. How to get market value of ordinary shares. Hapa hawezi. Hata nikopatia toka kesho. Hii mtaweza. Can I try you guys? Let's see. Market value of ordinary shares. Yeah, you can see like what Crispin is saying there. Thank you very much for coming up and telling me it is my third sitting. And I'm not really trying to belittle you in anything, in any way I mean, but just try to be talkative in AFM. Crispin, if you're talkative in my class, you will overcome. Why do I want students to be very talkative? Most of you are coming from your workplaces. And of course, accountants are handling quite stressful kind of jobs without money, isn't it? Again, you've been able to go through all that the whole day, then you are enabling, and then you come like now you want to die. No, we must be proactive. This time I'm passing this. Thank you very much. This time we will overcome. Yes, we have enjoy. We shall overcome. Second thing, we shall overcome. Let's put that behind us. We shall overcome. Of course, you guys, there is any ninja here who's doing the AFM for the very first time. You can hear what these guys are saying. We need to be very, very keen with this. All right. So now we are looking for market value of ordinary shares. Market value of ordinary shares. Now we are looking for market value of ordinary shares. Market value of ordinary shares. So what figure do you have? Oh, 625,000. A different figure. What is that figure? 176,400. First attempt lazima. Thank you very much, Babu. 176,400. How about the online ninjas? Is there someone who is able to give the market value of these ordinary shares? Market value of these ordinary shares. I can see Nancy giving me 176,400. 176,400. 176,400. 176,400. That ninja told me, Modim, I have to get this figure, and he has gotten it. He has gotten it. For the online students, it's already Nancy who has been able to get it, but we shall overcome. We shall overcome. We shall overcome. Now, in this case, here to get market value of shares, it's not even a big thing. What you need to know is how do you get the notes? How do you discover your notes? Notes stands for number of ordinary shares. To get number of ordinary shares, you take share capital, and then you divide this by what here, somebody? Like power. Anytime you want to get number of ordinary shares, you take share capital, you divide power. So go to the balance sheet. Go to the balance sheet. So in the balance sheet, what do we have here? In the balance sheet, what do we have here? In the balance sheet, we have our share capital, isn't it? So the balance sheet, we have our share capital. You can see our share capital here of 147,000, isn't it? So this is 147,000 divided by the power, which is what here? Power value is 20, right? Power value is 20, the one in brackets, 25. So now once you get this, my students, once you get this, to convert this to market value, then you need to look for market price per what? Per share. You need to look for market price per share. And are you able to see that market price per share? Abracadabra. Market price per share. Are you able to see market price per share? Abracadabra. Are you able to see the market price per share? It is given in the question. It's given in the question. Market price per share is given in the question. So this market price per share, ladies and gentlemen, is given here. It is not 25, this power value. Market price per share is given in the question. It is here. It is 30. They are currently trading at 13. So we have here 30. 30 per share. So therefore, what will this market value really be equal to? Let's see the market value. What will this market value be equal to? So the market value will be equal to, we have here, you guys gave me 176,100. Great. And therefore, X4. Remember, X4 is that market value divided by total liabilities, which they have forgotten. Great, thank you very much. So total, we 897,000, isn't it? 897,000. So abracadabra, if divided to one abracadabra, if divide by that. Inakuja 0.4 decimal place, always remember. Inakuja ngapi? 1.1967. Double on the line there. Double on the line there. Great. Thank you very much, Pamela Wabomba. This is one of my early morning students. Those students normally wake up with at 5. Students are really studying this. 5 a.m. They're always awake every day, studying. And now we are again with them here in the evening. Here with them here in the evening, which is very, very good. Very, very good. Now we are on to the very last one. On to the very last one, we shall not be seen by the last one. The last one is X5. X5, what is the formula? It is sales. You see, sales is the same as revenue. It is the same as turnover. It's the same as revenue. It is the same as turnover. Is there somebody who is able to see the turnover in the income statement?
Yes.
In the income statement, oh yeah, the turnover is what here, somebody? 1209,000, isn't it?
Yes.
Turnover is 1209,000. So this is 1209,000. You divide this by the total assets. Total assets are paid. 26,000, isn't it? Thank you so much. And then now you're going to come and give me this X bar. Imagine the last one. We are also tough people. Imagine this the last one. I can't believe it. I can't believe it. This is the last one. I can't believe it. Inakuja ngapi? 0.50. Thank you so much. Thank you so much. So now what am I done? And of course, it has been able to sink somewhere in our heads, sink deeply in our heads, what else? Now, once I get this, the second last step is to substitute the figure that you have in the Z-score equation. So substitute the above figures in the Z-score equation. 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 The Z-score has always been given to us, and we believe that the examiner will be gracious enough to continue giving us that Z-score equation. But should he change his mind, it will be very, very bad, isn't it? So the argument Z-score is always given to us. You can see here, they have given us this Z-score. It is 1 point what here, somebody? 1.2x1, isn't it? Plus what here? 1.4 x square plus 3.3x3 plus what here? 0.6x4, isn't it? Yes. Plus lastly we have what here? 1.0x, that's x5, isn't it? That's x5. So that equation will always be given to us. Will always be given to us. That is the equation will always be given to us. Always be given to us. So our role is to substitute, right? Our role is to substitute. So come and substitute this here. So our Z-score will be 1.2x1 will be minus 0.0355 plus 1.4x2. X2 is 0.1754 plus 3.3 x3. X3 is 0.0664 plus, ladies and gentlemen, we have 0.6x4. 0.6x4 0.6x4 is 0.1967 plus, ladies and gentlemen, in this case here we have x5, where our x5 is 0.95, 50 like that, 0.95, 50. We can talk of 1.0x. So is there somebody who is able to give you the final answer? Abracadabra. Final answer, you know. You're punching there, you know. You're punching there, you know. The final answer. What shall we get there? The final answer. What shall we get there? The final answer. And what shall we get there? Final answer. One point four. 1.4. 9. They don't talk to me all of them. These guys were physically here with me. Now they're switching off. No. 1.49. 5.1. Are you so sure that all of us are getting this figure? Like online students, I would say even one, even a chair. Getting this 1.4 something. 1.49, at least Ken will be able to get this. 1.49, 5.1 or 4.6, I don't know. Most of them are saying it's 4.6. Rounding off errors allowed, isn't it? But from what I'm seeing is like most of them are saying, well, it's 4.6. But we shall overcome. Either way, you are correct. You got 5-1. Or you don't have tomorrow or next time. Bring a calculator. Bring a calculator. All right. So the gentlemen, here we are. So from there, we go to the last section, which is what here, the decision rule. Go to the last section, which is the decision rule. So decision rule, you must cram these. Decision rule, you must cram this. And the decision rule, ladies and gentlemen, you must cram this number. We have 1.8, we have 2.7. You cram this number line. Decision rule, you cram this number line. Yes, Oscar, we are now there. Now we are there now. So now you cram this number line. So if, for example, your company is Z4 falls here, if your company is Z4 falls here, then you are 100% bankrupt. Anything less than 1.8, you are 100% bankrupt. And if your Z-score falls in between here, gray area, we talk of 50% what you're bankrupt. So it's 50-50, 50% bankrupt, 50% successful, 50-50. But if your numbers fall in this range, then you are 0% bankrupt, which basically means what your success? Success. 0% bankrupt, which basically means what here? Success. Basically means success. So you must climb at 100% bankrupt, 50% bankrupt, 0% what you're about. You must climb. So where is our sheet as oh, it's 100%, right? So in this case here, I'm being told that this figure is less than what here? 1 point what here? Is less than 1.8. And therefore, Shida Limited is totally bankrupt. There is nothing that can be done to this company other than liquidation. Totally bankrupt. Totally bankrupt. 100% bankrupt. 100% bankrupt. 100% bankrupt. All right. So, ladies and gentlemen, that is it. And I would always want to give you guys a homework. So, if possible on Monday, and ensure that you silently look for your company's own company, all you're working for. Your company's income statement and your company's what year? Statement of financial position, and calculate the Z-score of your company. Where do you think will your company fall? Where do you think will your company fall? A, B, or C? Even before you calculate, where do you think that it fall? Try to be very honest. Where do you think does it fall? Upon the city, simple decision rule, we shall overcome. Where does it fall? Is there anybody who is working for a company? I can see already somebody saying, hey, we shall overcome. I like leaders who are that one. They're saying A. They're saying A. So then we come to the end of our first class. I think this is my first class. It's been quite a nice journey combining these two sessions. These great leaders of ours here who are doing physical classes, we shall be meeting with them on Mondays and Fridays at 6 to 8. So if there is any student who does not have time to study with us on those late evening, like 8 p.m., these are very good class to join. You'll be joining us virtually, right? Virtually. These are very, very perfect session here. Come to the 6 p.m. to 8 p.m. 6 p.m. to 8 p.m. Yes, I'll be able to share that. I'll be able to share that. All right. And then, of course, we have our normal 8 p.m. to 10 p.m. Like right now, I'm running to 1, which will start at 8 p.m., 10 p.m. And then, of course, we have early morning classes. We are basically an all-round college here. So it has been an exciting journey with you tonight. I mean, this evening, I hope you may have not gotten anything much, but at least you go home knowing 2 technologies. A ninja, and then number 2, whatever. Thank you and good night. Bye. Now I know what it was. Yes. You're a great ninja. Join me. These are numbers 0793 555,000. 0793 555,000.